Good morning and welcome to our business, actually a breakfast, but it's more like lunchtime now. So our business lunch for the Hutt Valley Chamber of Commerce. This is a second take for those of you who tried us at 11, had a few technical issues. We think we've resolved them. There are a few internet issues this morning. So so this is our breakfast on our government tax loss carryback scheme. And this morning we're very fortunate to have with us Susan Robertson from Kendons in Lower Hutt. Susan, welcome this morning.
Thank you very much, Helen. So on the 15th of April, the government announced some further tax changes designed to provide relief to businesses that are struggling through this COVID-19 situation and the business disruption caused by it. The main change that most businesses are interested in is this tax loss carryback scheme that they've announced. So this is a temporary scheme and will allow tax losses incurred in either the 2020 year or the 2021 year to be carried back to the prior year when they may have had a profit, rather than carry them forward. So the benefit of that is that they get to use their tax losses a lot sooner, and they can also access refunds for any tax that they've paid in those earlier profitable years and get that tax refunded. There are a couple of other small changes announced, which I'll cover briefly, and then I'll go into in-depth on the tax loss carryback scheme for you with a couple of examples. So the second change that they've announced is that they've given the Commissioner of the IRD greater power for 18 months just to modify tax due dates and some of the procedural requirements that are set out in the legislation. So they'll have the discretion just to modify those slightly if needed, to give taxpayers a more favourable outcome. So this could include extending due dates for returns, for payment dates, if needed. Now, they haven't announced any extensions at this stage, but they have given the Commissioner the power to do that if needed. And the third change that they've announced is that they're going to be changing the tax loss continuity rules. So previously and currently, you've got a 49% shareholder continuity rule. So a company can only carry tax losses if you've got minimum shareholder continuity of 49%. In times like this, the government, and also permanently, the government wants to encourage more investment in companies. And they realise that having that 49% shareholder continuity requirement can inhibit investment, because tax losses could be extinguished and forfeited if it's breached. So they're looking at introducing a same or similar business test as well as the 49% continuity requirement. So this is in line with what Australia's done. So even if a business breaches that 49% continuity rule, provided the business meets various subjective criteria and is carrying on the same or similar business and meets criteria that are yet to be determined, then tax losses can carry forward. It doesn't mean that if a business has changed its business activities completely, it doesn't mean that they'll lose their tax losses. They will still be able to keep their tax losses if they keep that 49%. So it'll be an either or test. They can either meet the 49% shareholder continuity test or meet the same or similar business test. But this is going to be a permanent change, and so legislation on this, the tax loss changes, the continuity changes, will be released later this year, because they need to consult on that a lot more, and they're going to get some more guidance from the ATO on that scheme. So I'll go into the tax loss carryback scheme now a bit more, give you some more detail on that with a couple of just easy examples on how that might apply. Now, as I say, we don't have all the detail on this yet, and hopefully it does come out later this week. So this change has been well received by businesses, because it's aimed at businesses that are ordinarily in a profitable position, that have been impacted by COVID-19 and may have suddenly experienced tax losses in the 2020 year, or is experiencing a tax loss, is expected to experience a tax loss in the 2021 year. Now, under the current rules, when you have a tax loss in a year, that has to be carried forward and can be used against future profits that the business makes. What they're going to allow you to do on a temporary basis for this 2-year period is to carry back those losses and offset them against prior year profitable years and get a refund back of any tax that you've already paid in that year. Now, they're only going to allow you to carry a loss back to the immediately preceding year. So, as an example, if we've got a business that it was profitable in 2019, made a $200,000 profit. For the 2020 year, they were profitable, but then, you know, they're in the tourist industry. They experienced a sharp decline at the end of 2019, December 2019, and for the year ending 31 March 2020, they're now expecting to have a tax loss of $150,000. So we had profit of $200,000 in the 2019 year, tax loss of $150,000 in the 2020 year. What this means is that the tax losses from the 2020 year can get carried back against that $200,000 profit for 2019, giving the business an overall net profit for 2019 of $50,000. And it means that the business can then get a refund of any provisional tax and terminal tax that it's paid for that 2019 year in excess of its liability on that $50,000 profit. It also means, of course, that for the 2020 year, they'll also be able to get a refund of any provisional tax that may have been paid earlier on in the year before they started experiencing the decline and the loss. For the 2021 year, obviously, we're going to be looking at forecasted results. And so if a business is expecting and forecasting a tax loss for the 2021 year, they'll be able to carry that back against the 2020 year and get a refund of any excess tax that they've now paid in the 2020 year. So exactly the same example. 2020, they had a profit of $200,000. For the 2021 year, expecting a loss of $150,000, they can carry that back. So for the 2020 year, they'll have an overall net profit now of only $50,000. They may have already paid provisional tax based on an expected profit of $200,000, which is what they were what they actually had for the 2020 year. They'll be able to get some of that refunded back, so that they only have to pay tax on the net result of $50,000. Sorry, I hope that makes sense. It's easier to have an example on the screen to run through something that involves numbers. So how the scheme will work and the mechanism for getting the refund back, that's not quite clear yet. What we are expecting is that it could just be done through the provisional tax estimation scheme. So a business would go back and re-estimate their 2019 or their 2020 provisional tax liability and then get a refund, and then they can request a refund for any excess. If you're planning on using tax losses for the 2020 year and applying them back against the 2019 year, I would recommend that you get onto preparing your 2020 accounts and tax return as soon as possible, so you have a more accurate idea of what your tax loss is going to be. Because there are going to be penalties and interest if your tax losses are overestimated, and that could be quite costly for some taxpayers. So it's not, if anything, you want to be a bit on the cautious side with carrying back losses if you're not certain of the position yet. So the IRD interest rate is currently 8.35%. And so if you overestimate your tax losses, but then find that you shouldn't have carried those losses back, then the IRD are going to charge interest at 8.35%. So contact your accountant or contact Kendons if you need any help with getting your 2020 accounts and tax returns done as soon as possible. For the 2021 forecasts, if you're planning on using forecasted tax losses for 2021 against the 2020 tax year and get refund of your 2020 provisional tax, again, you'd want to be quite accurate and quite confident in the forecasting done for those tax losses. And so again, your professional advisors can help you with that. And there's programs and documentation that you'd probably want to have in place to support your forecast in case the IRD were to look at it and question you on that in the future. As with any tax refunds, you'll have to have sufficient imputation credits. So if you want to get a refund of your 2019 or 2020 provisional tax that you paid, which turns out you don't need to now because you've got the losses carried back, which reduced your liability, you'll still need to make sure that you've got enough ICs in your ICA account in order to get that tax refunded from the IRD. Now, following on from this temporary scheme for 2 years, the good news is that the government's looking at making this a permanent change, which would apply from the 2022 year. But further consultation is going to be needed on that because it is a permanent change, and so that will be consulted on and legislation introduced later on in the 2020 year. Now, I'll just cover off briefly the situation that some of you may be in, where you have a company and you're a shareholder employee in the company and you pay yourself and declare yourself a shareholder salary at the end of the year. And you may be wondering how that works with the tax loss carryback scheme. So if we have, and it's best to work through an example with this, so and hopefully you can all follow on the screen, but if you have questions, then type them up and I'll go through them at the end. If we have a company that has one shareholder employee, and normally they would be paying themselves a salary of 200,000 for the year. So for the 2020 year, they've allocated all the profit out from the company and they're going to be paying themselves a salary of 200,000. For the 2021 year, the business is expecting a large tax loss and they're expecting a loss of 300,000. What they'll be able to do is that company can carry back that 200,000 of that tax loss and offset it against the company's profit before shareholder salary for the 2020 year. So it will mean that the company itself for the 2020 year has no profit, no tax liability to pay, and it means that they don't need to declare a shareholder salary out to the individual shareholder. And then that means that the shareholder employee doesn't need to worry about paying provisional tax or tax liability on their income for that year because they won't have any. And they can get a refund of any provisional tax that they've already paid in their individual name based on that expected $200,000 shareholder salary. Now, the individual shareholder doesn't have, the tax loss carryback scheme doesn't apply to them. So in order to get the refund back of their individual provisional tax they've paid, they would have to file a normal provisional tax estimate and get it for nil for the 2020 year and get any prior provisional tax refunded to them. So that's about all the information we have, unfortunately, on the loss carryback scheme at this time until the legislation has been released. So yeah, a summary, you can carry back your tax losses from just 1 year back. So 2020 tax loss can be carried back to 2019. 2021 tax loss can be carried back to 2020. Be wary about using inaccurate forecasts of tax losses or overestimating the tax losses that you want to carry back, because the IRD will penalise you at 8.35% interest. And I'm not sure what dates they're going to calculate that interest back to. That will all be in the legislation. So in order to reduce the risk there. Get your 2020 accounts and tax returns done as soon as possible if you're expecting a tax loss for the year. And of course, it's always good to do that as soon as possible anyway, because even if you're not experienced a loss for the 2020 year, if your business has experienced a decline, you may be owed a refund of your provisional tax anyway, if you've overpaid that, and you may not want to pay a higher provisional tax than you need to on the 7th of May, which is the third date coming up. So that's about it on the tax loss carryback scheme. In terms of getting forecasts done, Kendons can help you with that, or your advisor or accountant, just to make sure that you are using the most accurate figures that you can. So I'll just have a look to see if we've got any questions that have come up.
I can't see any either, Susan, but I've got a couple of questions actually. So thank you for that. It obviously looks like a really significant change in the tax law, maybe even permanent. So that's obviously going to create quite a lot of well, it's a big learning opportunity for a lot of businesses, but obviously going to have a big impact on cash flow going forward, isn't it, for many businesses?
Yes. Yeah. So people want to get that cash in the hand now. So if they can get a refund of your 2019 tax that you've paid, and also reduce any future tax payments that you're going to have, then that's a huge benefit for businesses. And it is going to be a permanent change, but the details of that permanent change may be slightly different to this 2-year temporary scheme.
Yeah, right. Okay. And so prior to coming on here, Susan, we talked a little bit about the work Kendons is doing around cash flow forecasting, and does that feed into this in terms of the regional business partner network and the voucher funds that are available?
Yeah, so the cash flow forecasting is separate to this tax loss forecasting that needs to be done, because obviously cash in a business is quite different to, or can be quite different to, profit. So with the regional business partner network, that's something else that was announced on the 15th of April, is that the government is pumping another 25 million into the regional business partner network nationwide to give grants to small and medium businesses that need help with COVID-19, will need help with business advisory services to help them get them through the COVID-19 crisis. So Kendons, we're an approved service provider through the regional business partner network. And so businesses can apply and get funding for up to 2,500 and use that towards, we're providing business continuity planning and cash flow forecasting. And so you can basically get that done for free if you've got the approved funding from the regional network. So it's a fantastic opportunity, and it only takes about 2 minutes to apply, and then you'll get a phone call and there'll be some further questions, and then you're good to go.
Yeah. What's really interesting about the voucher funding this time, because of COVID-19, it's 100%. So the business owner doesn't have to spend anything to get that $2,500 grant from the government to help them plan their cash flow and their finances going forward in relation to COVID-19. Yeah. So so the website that they can apply for, can you pop that in the comments stream?
Definitely.
At some point, that would be great. Okay. And I just wanted to ask, is there any limit on the amount of refund? Is it up to a certain level you can get, or is it a total refund?
This is for the tax loss carryback scheme.
Yeah.
The refund will be limited to what you've paid in excess of what your liability is going to be. So if your tax liability for the 2019 year, after you've carried back the losses, is only going to be 20,000, but you've paid 100,000 in provisional tax, then you can get that 80,000 refunded, provided you have imputation credits available.
Excellent. Okay, so that's good. Thank you. I wondered that. I just thought maybe they'd put some limit on it, so you only get the first 20K or something. So that's good that they can get the full amount as long as they've got the imputation credits. Okay. So I don't see any other questions. Thank you for the feedback. I see someone's commented, very helpful. Thank you. We appreciate that feedback. And Susan, can I thank you as well for sharing your expertise with us and our business community this morning. Kendons is a platinum partner with the Hutt Valley Chamber of Commerce, and I work with Susan personally frequently on our own accounts, and I very seriously value your expertise, Susan, so I appreciate your time this morning. And if anyone has any questions, please pop them in the feedback in the comment stream during the day or when you view this video, and I'm sure we'll get back to them and find your answers for you. In the meantime, Susan, do you want to give us some contact details if people want to ask you some questions about the content you talked about today?
Yes, I'll put my contact details in the post on the Facebook page, if that's easiest. And I'll also post up a link to some broad information about what I talked about today that's been released by the government. And then when we hear more, I'll put an update on your page for you.
Great. And if you've got any of those examples written up, that would be fabulous, because you know, it would be good to be able to see them. So thank you very much again for your time this morning, Susan. Thank you for your expertise, and thank you for joining everyone, and have a great day. Cheers.
Thank you.